Let's start with the first topic, opportunities and challenges in the volatile environment. Dan, perhaps you have the best handle on our current worldwide M&A trends, so why don't you start this off?
Great. Thanks, Joe. I think overall we've been taking a look at a much stronger market since the bottom of the crash. And that market has moved around in terms of both Asian economies, the U.S. economy, and now in terms of Europe. That volume, while not really robust yet in terms of domestic economies, is starting to grow, especially in Asia. It's been driven by a number of factors. One, global growth. Two, liquidity. Lots of liquidity in the financial markets. And three, an appetite to take risk. We've watched that especially with some of the Asian entrepreneurs and with the sovereign wealth funds, as well as with some of the larger sovereign-owned state enterprises, taking a look at acquiring commodities, telecom, and now starting to move into things like healthcare. As we look forward and forecast out without being too concerned about what's going on in Europe, definitely see demand increasing over time and a lot more M&A to come in the next little while.
Okay, Chris, what are you seeing from a consultant's perspective?
Well, I would echo what I would echo Dan's comments in the sense that, and we were all chatting before we started the webcast, that the M&A market has picked up appreciably in the last few months. I think the level of optimism has increased palpably. And one of the things that we're focusing on with our clients is making sure that they are prepared acquirers to make sure that they're in the position to participate in what we hope will be the next M&A upcycle. So we've been focused quite a bit, and we're finding there's a lot of interest amongst our strategic clients on making sure that they have all of the pieces in place to effectively pursue transactions. And I think international transactions, as we will discuss this morning, pose greater challenges than domestic ones. And we'll talk about some leading practices that we've been focused on to help companies be effective in completing acquisitions internationally.
Okay. Alan, what have you been seeing?
The same. The M&A market has picked up enormously compared to this time last year when basically the economy was in cardiac arrest. And what we're finding anecdotally is that cross-border activity is very strong, but it is following different trade paths than in the past. We have, on the one hand, European investors in the U.S. Exiting non-strategic assets, and we have U.S. and global players readjusting their portfolios and focusing on some of the growth markets and emerging markets. So I think it bodes well for the coming year in the M&A sector.
One of the challenges that many companies are facing is uncertainty in the regulatory environment. I know you've all got opinions on this. Alan, maybe you can start.
Well, I think very significant experience with non-U.S. investors being wary of the U.S. regulatory environment, and in two respects. One is just the SEC overlay on the securities markets, and two is concern about the litigious environment in the U.S. And so sometimes it takes some education to get non-U.S. investors to come into the U.S. I think the other trend we're seeing is that post Sarbanes-Oxley, a lot of foreign investors who were already in the U.S. and were subject to SEC regulation have delisted and deregistered and tried to simplify their regulatory environment. But that doesn't mean they aren't interested in the U.S. markets or in having private ownership in the U.S. It's a sort of wariness of public ownership subject to SEC regulation and other regulatory regimes. We'll talk a little bit about that more in terms of best practices.
Okay, all right. Chris?
Yeah, Joe, I would just add to that for U.S. investors looking abroad, there clearly has been increased enforcement of the Foreign Corrupt Practices Act, anti-money laundering rules, OFAC, and other other U.S. Laws and regulations, and it's causing acquirers to, and we're seeing this with corporate development folks, that increasingly they need to be aware of the implications of these rules, and as they go through diligence, making sure that that's part of the overall diligence program, that they're not unknowingly acquiring problems. And so we've been doing quite a bit of work with clients in helping them sort of assess or assess the risk profile of a target, and then working with them and their counsel on ways to mitigate those risks.
Okay. Dan, do you want to add anything?
I think the other perspective I might add, instead of just pure regulatory from an SEC approval point of view, is the regulatory risk in investing in different countries. Mm-hmm. And so rather than just U.S. focus, inbound, outbound, if you think about some of the areas in Latin America that I know, Alan, you're close to, be it in Africa, the stability of the government, the stability of the fiscal regime, the stability of the approval processes. Think about China, the approval that they have in terms of how you export capital. I think all of those have also gone up in terms of heightened awareness for investors and for acquirers. And they're very focused now on, how stable is it, what could change, and why would it change so that it's not stable in the future.
Okay. Anyone else?
Well, I would just amplify on that. I think that there is a focus on transparency in the regulatory regimes, and it's hard to speak in terms of a region with respect to regulatory regimes, because even in Latin America you have very different dynamics in, say, Venezuela or Argentina than in Chile, for example, which has tried to model itself on the U.S. in many respects in terms of its disclosure regimes. And so that is a factor in making investment decisions that is increasingly important to investors. I think when I was speaking about the regulatory regime in the U.S., I think that it's more of a wariness of becoming subject to U.S. regulation because of the costs of compliance and a perception that is to a certain extent more perception than reality, that this is a more difficult environment than, for example, in Europe. And not necessarily true, but that is the perception. We need to work on that with some of our foreign investors.
Okay.